Today we're going to talk about the Bank of England, Bitcoin, BIFA and Poundland, as well as UK stocks that I'm buying right now. So an interesting combination. And if you like this video, please drop one of these to help beat that YouTube algorithm, as it is much appreciated. But firstly, starting with two comments of the week. The first one we can see from, I can't say the name here, but AREATW says, money losing expert. That's exactly me. I love that. That's such a great nickname considering how well I'm performing in the markets at the moment. The second comment of the week is a more serious basis. Now, this was a criticism, right? And it's the idea that I need to stop being so basic if I want to be a financial channel. There are some great financial products out there. Now, he goes on to, or she goes on to their own examples of what products they use. But I really wanted to take note of that first sentence. I need to stop being so basic. And you know what? I completely agree. So going forward in the future, I'm going to try and push out the borders a little bit. Try content that may be a little bit different to the channel. And so I'd really appreciate it if you let me know what you think of each of those videos. And if you haven't already checked out my most recent video, How to Lose Money, then I would definitely recommend you check that out. The card at the top right of the video. Now, into the main aspect of the video. We've got the Bank of England saying that the UK banks are no longer too big to fail. Now, this is interesting because they do an assessment, well, they've done assessments since the great financial crash of 2008, and they do these assessments like every 2 years, and they check really the liquidity of the banks, how capable they are, and how well they would be in a situation that is absolutely dire. So therefore, in the chance that a bank is failing, how well can they continue their operations whilst they fail at the same time? And I find this very interesting indeed, because the banks were a very important part of our life, and obviously since the great financial crisis, they did have some impacts here. But they now mention that the banks are no longer too big to fail, which I think is an interesting headline here, because this confuses me. But apparently they can provide vital services in a crisis without a taxpayer bailout. Now, I'm not sure how they've done this, but they did highlight that free lenders had actually fallen short of these requirements, and they've highlighted them down below. They found shortcomings in HSBC, Lloyds and Standard Chartered. But they did plan to raise enough financial resources to take the preferred path, and there was also further shortcomings in HSBC and Standard Chartered. Interestingly, of all of the banks available, the Santander's UK plan was the only one that passed all the requirements. So I suppose if you're looking for a place to keep your capital in the dire times, then perhaps Santander could be an option, but really not one for me. But it is interesting, and it goes to show you that over this time that we have gotten much more resilient banks, and they're still trading at fairly cheap valuations. And you know what I mean by cheap valuations, because the pound is now falling in value compared to the dollar and the euro, and we're getting a lot of bidding interests. For example, we've had BIFA. Now, BIFA is a waste management specialist. You've likely seen their name on those big industrial metal bins outside businesses. Now, interestingly, they've had a proposed takeover approach. At the moment, they're roughly valued at about £900 million, but the takeaway or the offer for this was about £1.36 billion, suggesting a fair premium to the market. Now, they've commented on this and they said that it has obviously based the value on the current value and likely future value, as well as taking into account certain risks, such as the HM Revenue and Customs landfill tax inquiry. Now, BIFA obviously think that this HMRC landfill tax inquiry is actually way better than it seems to be, and therefore they're heavily disputing it, although this could likely impact their valuation, and this is likely what they're objecting to here. They're looking for the fairer value of shareholders and whether this cash offer obviously to purchase the company is worthwhile, as they have got the shareholders in their best interest, but they are interested as well because this landfill tax could likely be putting a lot more fear on the company, and therefore meaning that obviously the valuation that's being offered to purchase the company might be a bit lower. I did find it particularly of note that their results were going to be on the 16th of June, but has now been pushed back to the 28th of June. So it might have been that this firm was waiting to take over this approach here and did it just before the results to see what really could happen. But BIFA is a quality company, in my opinion. They've always been a bit boring, but I think fundamentally they did look okay. And it goes to show, at the moment, the UK markets could be at a point where they are undervalued enough that we're getting a lot of takeover approaches from foreign equity investments. Now, as our currency is weakening, this is becoming more desirable for foreigners to purchase and invest, hence why we're seeing a lot more demand. One question could we be seeing bids for the likes of the fast fashion industry companies like Boohoo, my largest holding? I personally would not want this, but we have seen a lot of interest in the likes of the Hut Group, so it can't be too far-fetched to assume that Boohoo might have a few eyes watching over it. We've also seen the UK shoppers cut back on essentials. Now, the Poundland earner, in my opinion, is going to be such a great way, or they'll be able to see the data and information that's available and really be able to see how the cost of living has changed. And they've said that there's been quite a significant dent to disposable income, so much so that customers are now scaling back even on essential purchases in the short term. Now, they've said that they've had about a 17% interim revenue increase on a constant currency basis in the last, I think, 6 months, and that their underlying pre-tax profits rose to about 144 million euros from 112 million euros. Like-for-like sales rose by about 5.3%. Poundland is an interesting business to me because they are something that really undercuts a lot of the competition. And I think realistically, everyone kind of, or at least I do from where I'm from, has that urge to go, yeah, I'll have a look in Poundland. What bargains can I find? What can I get? And there used to be some quite good bargains in there about 10 years ago where you'd look in there and you'd find like all of these tools and equipment, at least as a guy, and you go, you know what? Normally these are like over a tenner and this one's here a quid. Sure, it won't last long, but I'll get the use out of it and then get rid of it. I mean, it's wasteful, sure, but again, as an investment, it seems like quite a strong company. And now I do believe they are a private firm. Again, I wanted to dive a bit deeper into Poundland here because there is something of note. And will this be a sustainable approach that they're able to maintain their prices at pound? Like, for instance, as I say, 10, 15 years ago, most of their prices, aside from one or two products, were actually a pound. But now we're seeing the increase, or much more products are now selling for 2, 3, 4, or 5 pounds, and that's what I've seen. So it's quite an interesting one. If they're able to keep costs low, then they're obviously going to undercut the competition significantly, and they may see a massive increase in market share. But again, the 99p stores are undercutting them by 1 pence, so they've got a lot of competition around, that's for sure. And Algo Blockchain. Now, they've had their May 2022 operational update. This month they've mined, or in May, they've mined 124 Bitcoin or Bitcoin equivalents, compared to 166 in April. Now, when we look at the fall in Bitcoin price over this last month, you can see that at the end of April it was about £30,000, and it's now dropped about 20%. Let's just go to the end of May, about, let's say, 16% to about £25,000 as of the end of May. Now, that's interesting because Bitcoin really isn't holding its value as an inflation hedge or a store of value. Yes, you can go back year to date and say, well, this has outperformed Boohoo. You're not wrong. You go back a year and say the same thing because it's only down about 8% the last year. But that's not to say it's very volatile, and a lot of people likely did buy, like myself when I was buying Argo Blockchain, at some of the higher prices here, and are likely caught on the way down with a savage downturn of about 40-odd%. Again, yeah, they wouldn't have performed much better in Boohoo. I'm just highlighting that one there. Now, they did mention that the Bitcoin network experienced an increase in difficulty, leading to a fewer Bitcoin mined. So when I check this on Blockchain Explorer, they're certainly not wrong. Now, I'm not sure if you can see this fully because it's slightly off the screen, but basically the network difficulty in April was fairly low, and then in May it spikes up and tapers off until the end, suggesting that yes, it's harder to mine Bitcoin, and that obviously Argo Blockchain is going to struggle somewhat. They also mentioned that due to the high temperatures in Texas, this led to increased energy demand and higher electricity prices, which they responded by voluntarily curtailing mining operations and reducing its energy usage at Helios. Now, I don't know how much up and running Helios is, but I don't know if that would be a significant impact to obviously the amount of mining they do, especially when you consider if they've obviously stopped mining during times of high energy costs, right? Why is it that their Bitcoin mining margins are 62% in May and compared to 75% in April 2022? Again, obviously Bitcoin has dropped significantly during this time, so that will have an impact here on their mining margins. But at the same time, you would expect maybe a bit more resistance on that downwards trend if obviously they're using it less and using it only at times of peak efficiency, which is something I've suspected the company has been doing for quite some time, as they managed to artificially inflate their mining margins compared to the rest of the competition, but had substantially lower amounts of Bitcoin mined compared to the competition that had a similar total exahash rate. I've also been buying 1 or 2 stocks in my self-invested personal pension. So you can see here currently at the moment my main portfolio, let's jump to this screen here, that I am absolutely being devastated. I'm down 49.16%, have £375 in cash, and realistically I may not have the capital available to help support that and really invest as much as possible. And that's because really there's a lot of things going on in life at the moment. I'm trying to finance a motorcycle purchase so that I can commute to the office at a cheaper rate, but the likes of a crash helmet alone is worth about £500 because I've got the head the shape of a light bulb, and so obviously times are tough. Again, stocks are dropping. I am still continuing to drip feed money into my investments, particularly Boohoo, which I've bought this week. Whereas I did buy roughly about 78 pence per share and it's dropped significantly since then. It's something I have to accept. I can't change that. What I can keep doing is making sure that I've got an income, keep earning money, and therefore keep buying as it drops, providing the quality remains consistent. And I do believe they've got a trading update next week on the 16th, which I believe is the Thursday, and that would be one to watch as well. And there will be a big update coming. But in my self-invested personal pension here, I've actually been buying more shares of Dunelm Group. Now they've dropped quite significantly after I've purchased them here, and it's not going to show you my exact purchases. But it's because Furniture DFS had pronounced a trading update, and they said actually things are struggling. We've got a profit warning here, and obviously therefore Dunelm Group being in a similar niche is also going to struggle. In a cost of living crisis, the likes of Dunelm Group is likely going to struggle. This is because they sell more expensive furniture goods, things that people are likely going to cut down in a cost of living crisis. Although I believe in the long-term outlook of the company, and I do believe in their dividend potential, so I'm just going to keep chipping away and buying consistently over the longer term. Again, this is something that will be in my personal pension, so I won't be able to access these funds until at least 57 years of age, and therefore obviously that's plenty of time for this to recover and also to build up a nice dividend cash flow along the way. So in my total SIP here, you can see that I also hold shares of Kingfisher, London Stock Exchange Group, Sylvania Platinum, and a very, very small position in Redrow, which I may increase going forward. But again, I'd like to do a little bit more research because Redrow was a former holding of mine. But do I really want to be exposed into the housing builders? That is of interest. And again, I think depositing money into the SIP may not be worthwhile for myself at the same time because my ISA has a better tax allowance, more accessibility, as obviously I can withdraw at any time, and therefore I could potentially be financially independent at a younger age. So it's a balancing here of should I really be putting extra money into my SIP or should I be transferring over my workplace pension on an annually basis? But obviously we only do full transfers, so this again is also a weakness. I may be looking to add some funds to this as well. Thank you for watching. Have a fantastic day.